Welcome to Ideal Financial's presentation on the reverse purchase home loan, a beneficial yet underused product to help real estate agents close more transactions and boost client satisfaction. Ideal Financial was founded in 1998 and focuses on residential mortgages both for purchases and refinancing. Broker Ken Adler and partner Paul Dorigo have placed a special emphasis on the federal HECM product, more commonly known as a reverse mortgage. While this type of loan is most often used in the refinance market, it's an extremely versatile product and can be used as a purchase loan as well. While real estate agents are generally aware of this government-insured loan, most do not understand how this program works or what the actual benefits are. This brief presentation is designed to give a better overview and more clear understanding of how the reverse mortgage is an essential tool for helping older borrowers purchase their next home. We will be covering what a reverse for purchase home loan actually is, provide some real-world examples of the loan, and describe how the loan works for the client. Additionally, real estate agents will learn how this rather unique program benefits themselves by providing higher overall client satisfaction. This program directly assists buyers achieve and very often exceed their own home buying goals, which leads to increased agent compensation and productivity via higher price points. The benefits to clients often have a profound impact on the overall quality of how they will spend and enjoy their years in retirement. Finally, we'll review who makes a good candidate for this program, including the basic requirements to qualify, and considering the lifestyle aspirations of the home buyers. The reverse purchase product is the home purchase component of HUD's HECM reverse mortgage loan program. The HECM, which stands for Home Equity Conversion Mortgage, is a government-insured loan for home buyers that are over the age of 62 and have a sufficient amount of equity in their homes. Some older home buyers wish to pay all cash for their next purchase, so they never will have a mortgage payment to service as they grow older. The Reverse for Purchase program is in place at the time of purchase for those qualified borrowers. This eliminates the need to pay all cash for a property for those buyers that didn't want to have a required mortgage payment in their retirement years. The buyer is allowed to make mortgage payments if they so choose, but there is no obligation to make such a payment as long as some basic conditions are met. Those requirements include living in the home so that it is owner-occupied, ensuring that all property taxes and insurance are paid, and maintaining the overall condition of the property through regular standard maintenance and upkeep. It's time to see a real-world example of this special loan program in action. Bob and Kelly, both 70 years of age, would like to live closer to their grandchildren and downsize from their large, two-story house. They know they will net $600,000 from the sale of their current home and are willing to use that full amount towards the next purchase. Because they are both retired and on a fixed income, they let their agent know that they absolutely do not want to take on a new home loan and have to make mortgage payments. Consequently, they instruct their agent not to look at homes over $600,000 as that is all they have from their sale proceeds. One option is to limit their upcoming purchase to the amount of funds on hand and purchase the next property all cash for the $600,000 they have available to spend. As an all-cash purchase, Bob and Kelly would own the house outright and have no mortgage payments. By utilizing the Reverse for Purchase loan program, the buyers can purchase the same property with much less than $600,000 out of pocket, retain those extra funds in their bank, and still have no required mortgage payment. The retained cash could be used for anything, including a rainy day fund, travel, home improvement, or perhaps even used as the down payment on an investment property. If the buyers in this example cannot find a house priced in line with the funds they have available to spend, typically they would apply for and obtain a new traditional mortgage for the difference and have to make mortgage payments in their retirement years. But as I mentioned earlier, Bob and Kelly specifically are against the idea of having a new mortgage to pay and explicitly restricted their agent to draw a hard line in the sand at $600,000. A better option could be to simply take advantage of the Reverse for Purchase product. Based off of their age and current interest rates, the borrowers could potentially purchase a property with a price of $800,000, $900,000, or even over $1 million and still have absolutely no required mortgage payment. This increased purchasing power can lead to not only happier clients, but a larger commission for the agents involved. More often than not, this option is completely foreign to the average home buyer and widely overlooked by real estate agents working hard to close their next transaction. Older buyers are often shocked and elated to learn they can purchase a house for a much higher price point than the cash they have on hand. while still maintaining no more required mortgage payments for the rest of their lives. Continuing from the same example, if the buyers still decide to limit their purchase price to $600,000 and not spend any more than that, of course they could simply purchase the property outright for cash. But by using the reverse for purchase program, instead of spending all $600,000 of their sale proceeds, they would now spend only $370,000 and keep the remaining $230,000 on hand. In either of these options, the buyers will not be required to make a mortgage payment. However, only the reverse option preserves nearly $250,000 of cash for their retirement fund or any other purpose they desire. If Bob and Kelly can't find a house with a price of $600,000 or less, this can lead to disappointment and even create friction between them and their agent. The buyers may feel like they have to lower their expectations and settle for a less desirable living situation. If they ultimately are willing to spend more than the $600,000 price point they had in mind, this means having to use other funds or obtain a new loan that will require monthly mortgage payments. Neither of these two options are as appealing as actually being able to purchase the desired property in the first place and not being obligated to make monthly mortgage payments. That's where the third option comes in. The reverse for purchase loan actually increases the overall spending power of these borrowers to a much higher figure, while still addressing their largest concern of having no more mortgage payments during their retirement years. This is truly a win-win situation, as both the buyers and their agent directly benefit from the increased buying power and the higher price point, respectively. A 2016 survey funded by the MacArthur Foundation of 1,761 households also showed 83% of seniors were satisfied or highly satisfied with their reverse mortgage. A 2020 study by the Journal of Gerontology that surveyed 1,088 older adults found that seniors with reverse mortgages had higher housing and life satisfaction rates than seniors without them. Clearly, introducing the reverse for purchase option increases the chance of having a positive outcome with older buyers. Take advantage of this program and be sure to inform your older clients that this option exists. The end result will be more satisfied clients, more closed transactions, and higher price points. Understanding the basic requirements and attributes of the reverse for purchase program is key to knowing how and when it should be utilized. First and foremost, the traditional HECM product is for borrowers that are aged 62 years and older. It's also important to emphasize that the reverse for purchase mortgage is still just a loan. Borrowers still own their home and stay on title. This point must be emphasized, as the number one misconception is that title to the home is being transferred and all equity in the home is being surrendered at some point in the future. Nothing could be further from the truth, but this myth still persists. The amount of the loan varies based on the age of the youngest borrower, the value of the home, and the current interest rates. The older the borrower is, the higher the loan amount can be. This type of loan does not have a minimum credit score requirement, but borrowers, generally, must demonstrate they have income sufficient enough to pay for property taxes and insurance. Borrowers are required to maintain owner occupancy, ensure property taxes and insurance are paid in a timely fashion, and maintain the quality of the home with regular maintenance. When the last borrower leaves the home permanently, the loan becomes due and payable. Heirs, a trustee, or other responsible party can then sell or refinance the house. Spouses that are under the age of 62 may still qualify under the program as long as the elder spouse is at least 62 years of age. Federal HECM counseling is also required. This is typically done over the phone and is an added protection for older borrowers to ensure they truly understand how the program works. Reverse mortgages are non-recourse loans. This means that the subject property is the exclusive collateral for the loan. If there is a deficiency at the end of the term of the loan, federal insurance shall cover that deficiency. The personal property and estate of borrower is off limits from creditors and is safe from being called upon to satisfy any possible shortages. In other words, the borrower's assets outside of the subject property are completely safe and protected under this federally insured program. The program is designed for residential properties only. Single-family residences, condominiums, and even 2 to 4 units are all acceptable as long as the property is owner-occupied. As this is an FHA loan, it also permits gift funds for the down payment, and as mentioned earlier, there are no minimum credit score requirements. Taxes and insurance still must be paid by the borrower, But there is also an option to escrow those expenses ahead of time if the borrower so desires and has the necessary funds on hand to do so. A trust may be used to purchase the home, and the agent must use the purchase forms that are associated with FHA purchase transactions. Seller and builder concessions are permitted up to 6% of the sales price. In summary, informing older clients of their option to use the reverse for purchase program benefits the real estate agent in multiple ways. Since the program makes it easier for buyers to buy more house with less money, the program facilitates their ability to move in the first place. It lowers the bar on how much cash they'll need to move into a home that will satisfy and perhaps even exceed their requirements. For the real estate agent, this leads to increased listings matched with more sales. The leverage buying power afforded to borrowers allows for higher price points, which of course, in turn, lead to higher commissions. For the borrowers, having no minimum credit score requirement means they can potentially qualify for the program even if they have major credit blemishes. The income requirement is minimal. Income is verified only to confirm that the borrowers would be able to at least cover their annual property taxes and home insurance costs. It's still important to mention that future property taxes and insurance can be front-loaded with a larger down payment, meaning in such a case the property taxes and insurance are already paid for at the beginning of the loan term, resulting in absolutely no required future housing payments. Front-loading the property taxes and insurance reduces the amount of cash on hand, but gives permanent relief from having to make any kind of housing payments into the future. All options should be presented to the clients and a custom plan created especially for their unique situations and needs. The program ultimately enhances the buying power of the borrower, boosts their cash on hand, and improves their cash flow permanently by utilizing the equity and savings they have built over time. Having extra cash on hand along with improved monthly cash flow during retirement years leads to a greater overall sense of satisfaction and security. For the borrowers, having no minimum credit score requirement means they can potentially qualify for the program even if they have major credit blemishes. The income requirement is minimal. Income is verified only to confirm that the borrowers would be able to at least cover their annual property taxes and home insurance costs. It's still important to mention that future property taxes and insurance can be front-loaded with a larger down payment, meaning in such a case the property taxes and insurance are already paid for at the beginning of the loan term, resulting in absolutely no required future housing payments. Front-loading the property taxes and insurance reduces the amount of cash on hand, but gives permanent relief from having to make any kind of housing payments into the future. All options should be presented to the clients and a custom plan created especially for their unique situations and needs. The program ultimately enhances the buying power of the borrower, boosts their cash on hand, and improves their cash flow permanently by utilizing the equity and savings they have built over time. Having extra cash on hand along with improved monthly cash flow during retirement years leads to a greater overall sense of satisfaction and security. We hope you've gained some further insight as to how this underutilized program can create and expand opportunities with your older home buyers. Everyone's situation is unique, and we are here to help. As a brokerage that specializes in this product, Ken and Paul are always ready to help answer questions, provide further clarification, and run real-world scenarios. Please call or email Ken or Paul today to obtain additional information.